and welcome back to the Bitcoin update. I'm going to be discussing the macro ranges in this video and also the fact we could be copying what happened here in 2019 in what we're seeing right now in the price action on Bitcoin. So that's a very interesting topic, and I think there is a pretty reasonable basis for saying that is true. I mean, look, it's not like super compelling, but it certainly is a fractal that seems to be copying, seems to be playing out to a certain extent, and we will be discussing that, and I think that's pretty major, and I think that's a pretty interesting topic that a lot of people are going to want to hear about. So that's the main part of this video, but I do want to first quickly dive into a very important thing, okay? And this is the monthly candle close. It's closing at 8 hours. A lot of you will actually watch this video by the time it's already closed. A lot of you will watch this video before it's closed, but I do want to quickly note out the important levels in the monthly candle. Basically, the monthly chart has been slightly problematic for Bitcoin over the past couple of months. You can see that on a cyclical level in each bull market and bear market, we repeat the same pattern. We have a red horizontal support level that we bounce off during the bull market, and then we lose that level, we go down, we form support on the yellow level. This is repeated over and over again, and then generally the red level acts as resistance, and once we break that, we go into kind of this, better territory where we back out of the bear market range, really. And, that's happened on two separate occasions. It's happened on a third occasion here, but the problem with the monthly chart in the last few months that we've seen is that Bitcoin's come up, it's bottomed out near the yellow level. Yes, it's slightly deviated below, but it's nothing too unique, right? Because we've had wicks below in the past. For example, in 2015, we had a major wick below, two major wicks below, same thing in 2018, so it's not a major deviation. But what was worrying was the fact we came up to the red level, around 29.3K, and we actually formed an evening star candlestick formation, as well as a bearish engulfing candle. So that wasn't particularly good. We were rejected very strongly there, but thankfully, this monthly candle close has managed to turn that around. Right now, Bitcoin sits at around 30,100. We want to be seeing the monthly candle close above 29.3K. So we've got 8 hours, and again, we're at 30,100. We want to be seeing the monthly candle close above 29.3K. That's the goal. Worst case scenario, that doesn't happen. Well, at least we got above the last close and invalidated that bearish engulfing candle. But realistically, the target for the monthly candle close, if you want to be, looking for macro buys once more, would be that 29.3K level. And if we do get that, we'll discuss that a bit more in tomorrow's video. If we do get that close, I think we probably will. But look, there's no guarantee. I mean, 8 hours is a pretty long period of time, and especially given the fact that we've seen very strong volatility in the last couple of hours. And why have we seen that volatility? Well, we've seen options expiry, and that option expiry is grabbed a lot of liquidity from the downside, and that might lead to, a bit more volatility to come. But realistically, when you see liquidity grabs to the downside, you generally don't move downwards straight away. That's just generally, right? So look, it's not looking too bad. It's looking pretty good. I think we'll probably get the close, but we have to wait and see until it actually happens, because I don't like to make, what's the point of me making a prediction for 8 hours away? I'd rather wait for it to happen. So 29.3K, that's level on the monthly chart. If we do get that, the macro is looking even more bullish than it already is, and trust me, it's looking pretty bullish. Now we can get into briefly the daily chart. What's happening on daily? Well, even though the monthly chart looks good, and even though we might get that 29.3K close, again, we'll have to wait and see. I don't think the daily chart looks particularly strong right now, unfortunately. I think we're kind of testing, and this is what we're going to dive into on this chart here in a second, but we're testing the top of a range, and we've got, stochastic RSI going downwards, bearish volume increasing in the slightly downwards trend. We've got a lot of support, but ultimately I do still think that it certainly is on the table, at least, that we would correct downwards further to something like 28.6 or 29K before bouncing from there, and we'll have to wait and see. Again, it's a grey area, a lot of grey areas in the charts recently, because there's no real identifiable structure here. I think this, pattern we're seeing, whatever you want to call it, it's not really an identifiable structure. I mean, if we round it out a bit, it looked like a rounding top, but we haven't done that yet. At the moment, it kind of looks like a hybrid between a horizontal channel and a rounding top, or even some sort of, maybe even potential head and shoulders forming, maybe an inverted cup and handle stick formation forming. It's just very, very complicated because there's no real clearly identifiable pattern. There's been many micro patterns, but nothing really clearly identifiable. So it's very hard to say whether I'm bullish or bearish in the short term. All I can say is that it's certainly on the table that we go downwards again, and it's certainly on the table that we break upwards. But what we can discuss, and this is why I'm bringing it up, right? Because as I said, a lot of gray areas. Monthly chart, we're waiting. Daily chart, we're waiting for a pattern. A lot of grey areas. So what can we discuss? What do we know? Well, before we get into the most interesting part of this video, and that is that we're potentially seeing a repeat of 2019, okay? we will get into the ranges, the clearly identifiable ranges. What is the Bitcoin chart looking at from a simplistic point of view? I can kind of display this to you right now. Well, it's got very strong fundamental key ranges. Well, what is the first range? Well, let's zoom right into the short-term price action, and medium term, I should say. So the lowest range on Bitcoin, the bad range, the super bearish range, is below this level, below 18.4K. That is the death zone, right? I just made up that name, but it's a very, very bad range to be in. We don't want to be in this range here. If we drop into this range, we're losing the support that we held for a decent period of time between around June and around November, and we're dropping back into the range that will likely form us new lows. If we re-enter this range here, we're going to go to new lows most likely, and that will mean an invalidation of partly invalidation of the 4-year cycle theory. So that is the range we need to avoid at all costs. We then have the range above that, which is kind of this range we lurked around for a long period of time during most of the bear market, and we just kind of consolidated endless consolidation between June all the way through to November. 6 months of boring consolidation. 5 months, I should say, in that region. That is kind of the range that I would say is probably the zone we probably don't want to re-enter again. Look, if we lose, these peaks over here, we drop back into that range. It's not looking particularly good for Bitcoin, and the reason is because we've spent so long, since March, building our support on top of this range, dropping back into that and losing things like the bull market support band, losing things like the 200-week SMA once again, would just not be very reassuring. I wouldn't really see why it needs to happen. Technically, we can re-enter this range from a cyclical perspective, technically, but it probably shouldn't happen. That's the main thing. We then have the current range we're in, okay? The current range we're in is actually very hard to identify properly because it's kind of vague, right? But we can basically oversimplify and take from the peak of this little stop in the correction we had in May 2022 and bring it across and say that is probably the current range we're in. If you wanted to be more optimistic about it, you could actually bring it down to the recent peaks we've seen and say it's something like that, right? Because that would explain why we've seen some rejections, but I'm going to just be conservative about it and draw it from all the way up here. And we can see that is the range we are currently in. Now, what is this range? Well, this range, I'd say, is kind of the range in which we're starting to really make some progress in the macro. We're not super bullish yet because we're still below, okay? We're still below the levels that were the foundations of the bull market. These were the supporting levels of the bull market. We bounced off these levels multiple times in order to stay in this upwards trajectory we had in the bull market. So it's not super bullish, but it is certainly making great macro progress. Now, anything above that, let me just make these charts a little bit clearer. Anything above this yellow box, so I'm talking literally anything above it, anything all the way up, whatever the price is above that. This is the bullish playground, I'll name it, the bullish playground, the area in which we had massive bullish momentum on both altcoins and Bitcoin during the last cycle, and re-entering that, we're basically conquered the market, and we're back, not back in a bull market, it's completely different, but we're back in the bullish playground, we're back above even the strongest foundations of bullish support, we're back in that range. So these are the ranges for Bitcoin right now, and obviously it's color-coded, red means bad and green means good. Right now, Bitcoin's in decent territory. We do have some room for the downside to go if we need to, and the upside is looking glorious and opportunistic. So, that's kind of an oversimplification of the Bitcoin chart. I think you guys will find that very useful. I'm going to go ahead and delete this chart now, and we can discuss it again in future videos. Actually, let me just go ahead and take a screenshot. 1 second. So, what was I talking about before? I was talking about how I was going to discuss that Bitcoin could be following what we saw in 2019. Now, again, it's rough, okay? It's rough. It's simply an observation, but I do want to quickly kind of start by saying we don't really know what's going to happen with Bitcoin between now and the halving. There's no real cyclical data between now and the halving. I'm actually going to bring up my 4-year cycle chart. Bear with me for one moment, and I'll show you exactly what I mean here. So if we're looking at 4-year cycle, what we can see is we've had 3 bull markets. So let's just look at this chart here. We've had 3 distinguishable bull markets. Sorry, I'm circling the wrong thing. 3 distinguishable bull markets, okay? We've also had 3 distinguishable bear markets, okay? Now, you need 3 data points mathematically to form a trend. So we've seen 3 bull markets, 3 bear markets. We've got a trend in both bull markets and bear markets. What we don't have a trend with yet is the in-between bit. We don't have a trend yet because we've only got 2 data points. So we don't have much to go off. We don't have enough evidence to actually call that a trend. And hence we can't actually make any reliable predictions. Keyword is reliable. Reliable predictions for what will happen between now and the halving. But we can make speculative ones. We can make observations. And one of the observations that I've been making for a while, and I know a lot of people are making as well, is that we're following what we saw in 2019. So what is the basis of this? Well, the basis of this is this. And let me actually flick to a 5-day chart just so I can get the whole chart on my screen here for the sake of simplicity. So basically, people are claiming that, like 2018, okay, we had a horizontal bull market level roughly over here that held us up during the bull market. We had the same thing in 2018. We had a horizontal bull market level that held us up during the bull market, okay. Then what we had basically was a bottoming formation in which we saw a rounding bottom, but not only a rounding bottom in which we saw kind of this low over here and then another low. So 2 separate lows in the rounding bottoms, right? So not only a circular bottom, but 2 separate lows, and then we managed to break upwards. Now, okay, so let's see if we saw that in 2022. Well, we did. We saw a rounding bottom, okay? And much like 2018, we saw 2 separate lows. Not only that, but the first low, much like 2018, was lower than the second low. So very similar bottoming formation, right? So a circular bottom with 2 separate lows, the first one being lower than the other. Very, very similar formation there after a very similar kind of bear market breakdown, because we had the horizontal support line just like we had in 2018, which we broke down from. So quite similar at that point. We then saw, so let's delete everything again. We then saw 2 distinguishable, in fact, 3 distinguishable moves, okay, so from a low. So we saw the first move over here. That's a very, very clean move. Second move over here, correction afterwards, and then a third move which led to the top. Okay, so 3 moves. How long did it take to see those 3 moves? It took, for counting from over here roughly in March, it took roughly from March to July, so it took a period of time around 4 months. So that's probably the deviation, but 3 distinguishable moves. Now, it's taken a lot more than 4 months this time. You know, we've been moving since around January. It's already June, but we've seen 1, 2, and this could be the third move. Now, the argument is that this move is not topped yet. And the argument is that since we had the same low, the same structure of the low, the same kind of breakdown from the same rough support line during the bull market, and the same 2 moves, right? The argument is this third move will go higher. It will probably take us to something in the mid to high 30K ranges and then top out. And then we would see something similar to what we saw in 2019, which we saw an extended period of sideways consolidation. And then after the halving, and a few months after the halving, we actually start going upwards from there. That is the argument. So what would this look like? Well, it would look something like this. Right, another move upwards to the high 30K area, probably, you know, somewhere in that region. Then just sideways, maybe some downwards price action for a very long period of time. The halving's in April. A few months after the halving, say July, we'd start to go upwards, and then we'd start to see the actual bull market kick off. And then finally we'd top out in Q4 2025. Where would we top out? Well, it's kind of hard to say, but it certainly would be higher than that. It would be you look around, if we're taking very, very rough estimates from cyclical analysis that I've done, we could be looking in the low 100K region. So that is basically what the theory is. Now, again, I want to make this very clear. That's not a prediction, because you can't predict something without the cyclical trends. There's no cyclical trends to support it, but it's certainly an observation. And I don't think it's a particularly bad observation, right? I don't think it's just, a terrible observation. There certainly are similarities. But we have to understand that, we don't have a cyclical trend to support us. We can't actually make it any sort of prediction. But, I think they do look similar. I think there's logic in that. I think there's a case to be made there. Yes, the moves aren't the same in percentage form. As you can see, the first move actually in 2018 didn't take us above where the support level was from the bull market. And our move over here, it actually did, right? So we had the bull market support bull market support level from the bull market. It actually took us under, I should say. So I guess I'm wrong in saying that. I probably should have looked at that chart. I suppose the second move barely took us over and actually rejected ultimately. The second move in the previous bull market over here, the period of time where we're kind of looking at, it took us well above. So I suppose that's what I was meant to say. But look, the point is, we can't be sure, but it is an interesting observation. We'll certainly keep tracking it. So thank you guys for watching. With that said, I hope you enjoyed the video. Guys, check out the VIP group. It's in the Telegram channel. You'll find the information for it and the results. We're going to be having a interesting sale shortly. I'll announce that shortly, so go ahead and join that information group, and I'll announce the sale in there to celebrate the middle of the year. Bitget exchange, guys, 5 times lower fees than Binance, optional KYC from the USA, and optional KYC from everywhere in the world, so you can sign up from anywhere if you want to, and if your country is restricted, use a VPN and you'll be able to use the exchange. Again, 5 times lower fees than the Binance, 15% trading fee discount for using my referral link. Guys, best exchange in the market, cheapest fees, get into it. And then we've got Crypto Academy. If you want to learn how to trade, this is the place you can do it. You can find the link to the website in the description below. Read up all about it, and ultimately throw us an email, which you can find on the website. The email address is here on the website. You can email us there for payment information and also more information on the course. So thank you guys for watching. I hope you enjoyed the video, and I'll catch you in the next one.